Welcome to the show. Today we have on Iain Butler, and Iain is the chief investment advisor for Motley Fool Canada. Iain was tapped to start and grow Motley Fool Canada all the way back in 2013. And I think by the end of that year, Iain, you'd already grown Motley Fool Canada, the subscriptions to just under 5,000. So welcome to the show, Iain.
Great to be here, and we've talked before, and it's good to see you again, Robin.
Yeah, it's definitely good to see you. The pandemic was just boom times for Motley Fool Canada, as well as Motley Fool, the parent, in the US. I believe you grew it something like three times during the pandemic. People were at home. People who may have not ever traded ever before, maybe were opening up brokerage accounts, Robinhood, etc. Some of the brokerages in Canada. Tell me about that crazy growth period during the pandemic.
It was crazy. It was like we could do no wrong. I think people might recognize our name from we market fairly extensively across the internet, and every ad it seemed that we put out there, it was attracting attention. So it was a lot of fun to be part of. But as it turned out, we did find that we a lot of the people that were signing up weren't I wouldn't call them sort of real investors. They were attracted by something shiny and new, and I don't know that they sort of latched on to the long-term investment philosophy that we put forward. So it was fascinating to watch, and it's sort of been fascinating to see on the other side of things too. We maintain a super healthy membership base, but we did find a lot of churn occurred with those people that signed up through the pandemic.
Yeah, absolutely. How are you tapped? If we go back to October 2013, like who tapped you on the shoulder? Did you apply for the role? How did this all come about to head up Motley Fool
Yeah,
Canada here?
it was a fun story. I was working in the investment industry in Toronto. I'd sort of been in the institutional world for the entirety of my career, starting in about 2000, and I would say it was either late 2011, early 2012. I had been on the Motley Fool's mail list, and I noticed a note come through that they were looking for blog submissions. They were opening up a blog. So I was like, I'm a fan of the Fool, a longtime fan of the Fool. I'm doing this research anyway. Let's throw together a few words a couple times a month. They were paying $50 a submission. So I was like, just do this on the side type thing. So I did that for, I don't know, 6 to 8 months or so. Made 10 to 12 submissions, something like that. And then I let my employer know that I was doing this, and frankly, they weren't too pleased with that, with that situation. So I stopped and had all my submissions taken down. And then maybe a month or so later, an email arrived in my inbox from a fool in Australia, actually, and he was indicating that he had started the Australian business of the company, and he had been tapped to start a Canadian subsidiary as well. And I guess I had garnered enough attention with my submissions that they were interested in offering me that position. So that's kind of out of the blue. I never had any intention of working for the Fool, although I had, again, been a long-time follower. Early in my career, this was like, it was my lifeblood. I loved learning about investing from the Motley Fool. So it was a great full circle situation. And anyway, so that was August 2012, and I believe my first day was November 2012 that we really kicked off the Canadian business.
Yeah, I remember as a teenager going to Chapters bookstore and picking up a few books by the Gardner brothers. Motley Fool was fun. It was accessible.
Totally.
Tell us about that mantra. Like, what was the vision for the brothers for starting to write the books and get the service going originally?
You say division?
Vision.
Oh, vision.
What was
Sorry,
the vision in
vision.
in
Yeah,
Motley Fool for people who don't know?
yeah. I mean, we've heard they start. So Tom and David Gardner, brothers, are the founders. Tom is still the CEO of the company. David is less active, but sits on the board still. He's not an active. He doesn't actively put stock picks out anymore. But man, if you talk about investment track records, David Gardner's is top percentile, and maybe even better than that. So wonderful long-term track record there. But yes, Tom and David started the company, and they founded it in a shed, essentially, in their backyard. And they were both, I believe, English majors at university, so no kind of formal business background, but always had an interest in the stock market. So, and good writers, so away they went. And I believe the story goes that their first mailing, gathered all their families and friends, addresses, mailing addresses, formal mailing addresses, and gathered as many addresses as they could of family and friends, sent out this letter, and I think received about 2 to 5 responses or something like that. It just kind of fell flat, and but they stuck to it, and it's built into a multi-decade. I think we're past 30 years now that the company's been alive, and huge following across North America, across the world. We've got, as I said, an Australian subsidiary. There's a subsidiary in the UK that was started maybe 20 years ago or so. So it's a wonderful success, and it's not an easy business to start. I think we've seen sort of the proliferation of these newsletters on Substack and whatnot, and a lot of them don't last. They go away. So it's been. There's been some thin times for the company. There's been some boom times. We mentioned that pandemic. But through it all, I think we've sort of persevered. And for me, it was always the tone. I did have a formal sort of university business education and sort of had been reading the fancy books, The Intelligent Investor and whatnot. And I went through the CFA curriculum, and none of that stuff really stuck. It was just like dried, bland. The beauty of the Fool's material was it had some personality to it, and it like a human touch, and it just landed. It fit my tone perfectly.
That's what I loved about the Motley Fool as well. It was accessible, had a fun tone. It was easy to learn about the investing world early on. Out of those 12 submissions that you made originally to the Motley Fool, which one set you apart, do you think?
Gosh, I remember doing a write-up on Citigroup warrants. There were, coming out of the financial crisis, the American banks were trying to gather as much money as they could, so there was a Citigroup warrant issue that was out there, and I made a case that was a good idea. I do believe they went to zero, but I remember getting some feedback from the Fool that was like, that's pretty well done, well thought out, and so that's one that stands out. Frankly, I can't think of too many of the other submissions at the moment.
It was so long ago, right? It was over 10 years ago. So you're in charge of growing Motley Fool in Canada. What are the growth hacks and the growth principles that you implemented right away to grow the base?
Well, yeah, and it was a funny introduction for me. I didn't fully understand the business when I did sign on, even though I knew the Fool. I didn't fully understand how the business worked. But we are very much a business driven by email addresses, frankly. So when I started, I was tasked with gathering as many email addresses as I could. Now, the Fool had built a reasonable sort of database of Canadian email addresses just from its U.S. business over the years. But my task was to continue growing that file. And really, it came down to content creation. So cranking out, and again, my background was in the institutional world, where kind of you spend, I don't know, two weeks on a single company, and you write up a full 3,000 word report and go through every minute detail. So that's kind of how I started, and they had to say, okay, that's not how you build an audience here. You build an audience with a couple hundred words and like one thought, and just get it out there, and that's how. That was the hack. It was kind of just content creation, and it wasn't. There was no AI then, and it was just me. So we did build a stable of writers as we went, as we could prove that we could attract email addresses and have enough of an audience to sort of launch a subscription-oriented business. That was the case to continue building a stable of writers. And now, frankly, I actually don't know where that stable of writers is at right now. It's maybe 20, 25 writers or so that we have creating content for us. And it's just kind of snowballed.
In the first year, how many articles do you think you wrote per day for the Motley Fool Canada?
I was encouraged to write up to about 5 a day. So 5 200-word sort of snippets was the idea. And sometimes it was easier than others. When there was a hot news story, that would garner attention. But some of them were pretty dry and bland and didn't work out all that well. But we had enough hits to attract an audience.
And then where did you find your first stable of writers back then? Where do you source them? Where do you promote the openings? How's that happen?
So, I mean, we source them through our collection of email addresses, essentially. They were fool followers were who we were after. We had an in-person event that I recall at the University of Toronto, maybe about 6 months into sort of mid 2013 or so. I think maybe about 25 people showed up. A few fools from the U.S. came up. If you're familiar with Morgan, do you know Morgan Housel at all? Are you familiar with his work? Yeah. He was a fool writer at the time. He came up and did a spiel for us. So yeah, maybe of the 20 to 25 that showed up for that, I think maybe 5 of them did create some content for us. I don't believe any are with us any longer, but that was sort of the initial stages. It's mostly the people following the fool are who we tend to attract as content creators.
Yeah. So let's talk about 2024. Let's hone in on the market itself, the stock market. Let's reflect, Iain. Highlights for you, surprises this year. What were the big winners that you covered through the 3 subscription services? You have the Microcap, ServiceNow, you have the Hidden Gems, and you have the Rule Breakers. So let's talk about 2024.
For sure, yeah, and there's a couple more too. We've got a dividend service, and then the kind of the flagship is Stock Advisor Canada, which is the service that I sort of have my hands on mostly. But we do have an investing team, and we all sort of spread the work around. But yeah, I mean, any year, long term, the North American markets sort of tend to go up 8% ish, maybe a little less if you take inflation out of that annually. That's the super long term average, and any year that I don't know where are we at 20%, I think, for North American markets this year. Canadian markets even participated. Since I started with the Fool, the Canadian market has just lagged the U.S. so significantly. So it's been nice to have a bit of a tailwind there. That said, it's kind of hard to point to anything what's driven the Canadian market, frankly. Like the banks have had a good year, but I mean, energy has not.
We missed out on Gen AI, didn't we? Like all eyes were on Gen AI and the investments going into it in the U.S. Right? They soaked up all the attention.
Totally. We've got some small cap companies that I think hit that theme, but nothing of the size certainly of the U.S. companies that are driving the U.S. market. So. Anyway, it's a strong year. Anytime the market goes up 20%, I went back and looked at the 12. So we do 2 recommendations a month in Stock Advisor Canada, 1 Canadian, 1 US. Of the Canadian recommendations, so we've made 12. 1 has put in a negative return thus far, and that was our January recommendation of major drilling, and it's down 1%. So. Lots of green on our scorecards, and we'll certainly hope that continues. But it's going to be hard to follow up a year like this, and it's getting tough. It's getting tough to come up with new ideas, and just given the run that so many things have had.
Can we talk about some of the winners from the year to date in 2024?
Totally. Yeah. I mean, the one that stands out, and this might be a bit of recency bias, but we recommended Shopify back in 2016, shortly after the IPO. I think it IPO'd to great fanfare and then came and sold off a little bit a few months later. So we recommended it then, and it's been, I think, the best return that we've got on our scorecard in Stock Advisor Canada. But I mean, Shopify just keeps winning. Their last quarter results were outstanding. Every quarter that they report is frankly outstanding. It just depends on how the market is feeling that day. This time around, it shot the stock up by about 20% after the results released. Shopify's up 62% for the year. So good stuff there. And that's a great example of sort of the fool's investing philosophy in play. It's find these winning companies and just hang on to them forever and watch those returns compound. There's so many examples of that in the U.S. services. But a few others that have done well for us. Aritzia is a recommendation that we've made. It's had a great 2024 after a not so great 2023, so it's up about 80%, 82% on the year. Brookfield's had a great year. It's perhaps the favorite amongst the Canadian investing team for long-term returns. It's up 59%. Constellation Software is another company that we've recommended. Big fans of it. 42%. And then we've had some really great success with microcaps. I think for so long, microcaps have just been completely ignored, and finally some of these companies are getting some attention. So VitalHub is a company that we recommended. It's up 183% for the year. Kraken Robotics is another, up 145%. Propel Holdings, 191%. So big triple-digit annual returns for a bunch of the smaller companies. And a lot of them were bought out, actually, too. There was a real wave through the year of, we have about 50 companies in our microcap service, and I'd say at least 5 of them were taken out over the course of the year. So that if there was a bit of a theme, or one of the themes within the Canadian market, I would say that some of these smaller companies were just too cheap and too attractive to sort of be left in the public's hands. So off they've gone.
Yes, content creation is one thing, right? The Motley Fool does a great job of pumping out great content, multiple articles per day across your stable of, I think it's 20 to 25 writers. But when it comes down to picks, stock picks, it's basically you, right? That makes the stock picks across all of the subscriptions in Canada.
Yeah, well, again, I head up stock advice. We've got 5 services that sort of the Canadian investing team touches. There's myself along with 4 others, and each service has a advisor. So I've got Stock Advisor Canada. Jim Gillies, my colleague, he heads up the Hidden Gems Canada service. Nate Parmalee heads up Dividend Investor Canada and Rule Breakers Canada, and then we sort of share the microcap service as well, spread it amongst ourselves. But so the stock picks land on the advisor for the particular service, but there's a lot of input that goes into those picks from the entire team. So I kind of call it a leader with input type investing style and process. Yeah.
So let's talk about Stock Advisor Canada. Where you're at the helm, you're the one making the picks. What's the strategy for Stock Advisor Canada?
I think underlying all the Fool services is the long-term investing strategy. We're very happy to hold these companies forever. That's the intent when they go into the service. We do not want to sell them. We want them to compound and grow and produce massive returns. Now that doesn't always work out, obviously, but when it does, it really that's what carries the service's performance. So it's just critical that members understand that we are at least 3 to 5 years. We want them to hold these recommendations and ideally just leave them alone and do nothing with them. So we do provide updates when we deem it necessary, but not every news release warrants a comment or a thought. They kind of are what they are. So we do like to take somewhat of a hands-off approach. Again, we want people just to ignore them and let these companies do their thing. So long-term philosophy underlying, I mean, we spend a lot of time on company fundamentals, obviously, and I would say our Canadian services focus more on, and just because it's the nature of the team that we have, focus more on valuation than some of our U.S. services. U.S. services are, I would say, a lot more growth-oriented, and that can work, and it's had its bumpy times as well. I think back to the pandemic, so many kind of airy companies were running crazy, and a lot of them have crashed, and unfortunately, a reasonable number of those were sort of in some of our U.S. services. So we do pay attention to valuation. I would say over the course of my career, that's one thing that certainly has evolved. I used to be a kind of a stickler or trained in the value investing philosophy, and I think I've loosened that somewhat, especially when it comes to sell decisions. Selling stocks when they get expensive, I've found can be the most expensive decision one can make. Unfortunately, I clung to a valuation model on Tesla and Nvidia and sold them way too soon. So yeah, that's definitely something that's evolved with the philosophy that we have. But yeah, long-term, fundamental oriented. Pay attention to valuation, but don't cling to it.
And what data sources do you use, Ian, to make your picks? Where do you go?
Yeah, we've got access to Capital IQ, S&P Global Market Intelligence, I think is a more formal name. So that's handy. You can pull up every financial metric that you need in a second. I think though just broad reading. Frankly, Twitter or X is a very handy resource. Just to tap into what the world is thinking about various things. So that's a good way to keep up on news flow and whatnot. But in terms of number, and I mean just company filings, we go straight to the source and read transcripts, read read through quarterly releases, read through annual reports. Nothing crazy, just straight and narrow.
So, can you walk us through one recent selection for Stock Advisor Canada? One recent stock that you picked, and what was the process from start to finish to say this is one we want to add?
Totally, yeah. And actually, so the most recent recommendation in Stock Advisor Canada was actually a re-recommendation. So we do like to, when we find a company that we like, we love to have multiple entries on our scorecard. So company is called Stella Jones. If you're familiar with it at all, it's one of the more boring businesses, I think, in the world, maybe. Rail ties and utility poles with a bit of lumber distribution thrown into the mix. So we re-recommended it after its most recent quarterly release. Stock sold off by about 17% or so, for not a great reason. I think they lowered their 2025 guidance, and that's again given our long-term lens, it's not really something that we pay much attention to at all. Forward 1-year guidance, so that's an opportunity. And the way our process works is, we have two meetings a month, 2 gatherings, virtually, and the 5 of us get together. One's Canadian, one's a Canadian-based discussion, one's a U.S.-based discussion, and we sometimes formalize, like write-ups are brought forward. Other times we're just kicking around ideas, just like we're doing here, shooting the breeze type thing. So. But yeah, ideas surface through those meetings, and then again, the advisor is sort of tasked with landing on the decision. And then I like to circle back with the team and just sort of lay out my thoughts. Like, we talked about 5 companies in the meeting; they all sound good. We like to put companies on a shelf too. Like, it's nothing. Very rarely do we just outright shun an idea. It's like, put it on a shelf, and at some point there'll be a price, or maybe there's a better idea that month, and we can bring that one back next month or 6 months from now or whatever. So it's rare that we outright say, this is a terrible company, let's totally ignore it forever. That seldom happens. But yeah, the advisor takes the input from the team and then lands on the decision for that month's recommendation.
Yeah, so Stella Jones was a re-recommendation. Can you name one and walk through the process? That was a new recommendation for the year, for the first time.
Yeah, so prior to Stella Jones, our most recent, our November, I guess, recommendation in Stock Advisor Canada was Cipher Pharmaceuticals. Little on the small side, frankly, for that service, but again, I think there's 2 areas of the Canadian market where there is opportunity right now, or the most opportunity is small caps and dividend-paying stocks, especially with what the Bank of Canada has been doing. So, trying to sort of hit those 2 themes with some frequency of late. So, Cipher Pharmaceuticals, at one point, it was one of these microcaps that was ridiculously cheap. The stock price was $2. They had a pile of cash on their balance sheet, a cash-generative business. So it was, and we did put it in the microcap service, but. They made an interesting acquisition this year, and they'd been telegraphing that they'd been shopping, and they made a very attractive looking deal. Took their cash from the balance sheet. I believe they used a bit of debt. Or maybe they might have used some stock or debt to sort of bolster the financing, but mostly a cash transaction. And I think it opens up their world to the U.S. It was a U.S. acquisition. They brought in a U.S. sales team, and they're a pharmaceutical distribution company, essentially, so that they've opened up distribution channels across North America now, and they had a promising. This is a fun drug to talk about. They had a nail fungus treatment that was going through the approval process in the U.S. They've got exclusive Canadian distribution rights for this treatment. It's a Swedish product, and it's top market share in Sweden for several years, but it actually just it did not make it through its phase 3 trials in the U.S. So that might be a bump in the road, but I think it was well reflected already in the company's valuation. So even if that doesn't work out, this transaction that they made, I think, holds the company gives the company great growth opportunities in the years ahead. So it would be a fun one to follow, I think.
Absolutely. So you mentioned that you're a co-advisor, sounds like, for the Microcap service, and it sounds as though it's newly introduced as well in Canada. So why the Microcap service, and why now?
Yeah, I mean, so it might be a couple years old. It's over a year old. Might be closer to two.
Hmm.
But similarly, it was just it was something that we'd sort of kicked around for a while. Frankly we were scared to launch it just because of trading purposes. These things are illiquid, and
Yeah.
if you sort of build a membership base and put an illiquid idea to the membership base, it can really cause problems with the stock prices in the short term anyway. So we were cautious to introduce the service, but it's performed tremendously. I think we were right that it was definitely an underappreciated corner of the Canadian market, especially, and we've just had some huge returns in a relatively short period of time across the board. We've had some duds. That's the thing with microcaps, especially. So we certainly recommend to people that they do not put their entire life savings into the microcap world, but a corner of their portfolio I think is appropriate, and position size accordingly. Diversify 5 to 10 names, something like that, is what we suggest, and sort of no more than 5% of one's portfolio. But it's fun. These are fun companies, and it's sort of it's fun to see the winners win, and you know you're going to get some losers, and you sort of just shrug your shoulders at those.
Huge winners in the microcap service. Can you talk about those huge winners?
Yeah, I mentioned a few. So Vital Hub's a really interesting company. I think it's another one that we've ported over to Stock Advisor Canada after it sort of cleared the microcap.
Yeah, it's over 500 million market cap now.
Exactly, yeah. And I think when we recommended it, I would say it was under 200 million. Our cap in the microcap service is 200 million. We try to keep things under 200 million, and then, but yeah, it's grown tremendously. Similar to Cypher, they've made their most significant acquisition this calendar year, and they've got an acquisitive past and have done a great job with it. I think they're up to 18 acquisitions over the course of their existence. So I think they know what they're doing on that front, and they've grown tremendously. Interesting. Another thing that attracted me to Vital Hub was the inside ownership and the board. Francis Chen is somebody that I was familiar with from back in my institutional days. He
Astra Networks, is that right?
Exactly,
Yeah,
exactly. Yeah, and I can we met with, I don't know, 100. Back in the day, I would meet with a lot of CEOs, and the meeting that we had with him stood out. He was just humble and earnest and everything that you want to see in an executive. He empathetic to shareholders if maybe the stock wasn't doing all that well at the time. But anyway, he sold that company for several $100 million, and he's become a bit of a. You see his name pop up in a few of these smaller companies across Canada, and that was a selling point for me, anyways, with Vital Hub.
Shin was in, I think, Media Valley, which is recently bought out
Correct.
too,
That
right?
was another. Yeah. That's an example of these microcaps that have been taken out. That was unfortunate. We had recommended Media Valley as well, and I don't know why they sold it. Actually, it kind of got stolen from us, which is the case with a
It
lot
was a
of them.
viable business. Yeah.
Yeah, totally. And I think they'd just gone cash flow positive, and they were on a good trajectory, and yeah, it got taken from us. So that was unfortunate. I don't like when companies get acquired, frankly, because you miss.
That means more work for you, right? You got to go out and start turning over more rocks. And
there's that, and you just miss the long-term compounding that we've talked about. Like it's game over. And it feels okay in the moment when you get your 20 or 30% bump, but long-term, if you're getting a winning business taken from you, it's not ideal.
most people want the next Shopify, right? But there's a lot of, like you said, tech stories in Canada that are just taken out, and they just don't see their life and all the gains, the potential gains in the public market, right? We can't take part.
Nuve is another example of one that got taken from us this year after we had recommended it higher, and the stock had not performed, but the company was doing quite well and has a great growth trajectory, and that was a bit of a dirty one, actually, because management is keeping their shares, but the public investors were not allowed to keep theirs. So we didn't like that deal for a number of reasons. Yeah.
Is it Ryan Reynolds who bought in? He invested in a Nuve, something like that?
Yeah, and I think there was some smoke and mirrors around that transaction, if I recall. I don't know that he actually put any real cash into it, or I think his name, though, got associated with it.
Right?
Yeah.
Are there any more standouts in the microcap service?
In microcap, let me just see if one jumps off the page here. I mean, A really interesting company is Vertical Scope Holdings. The ticker on that one is FORA. So that's been a recommendation. It's up 205% for us. It's a business a lot like Reddit. If people are familiar with Reddit, which is US
Forums,
traded.
right? I think they just consolidate different forums, and it can be
Yeah,
very
it's
niche too, right? Like
niche.
fishing
That's
and
right. Niche sort of
racing.
discussion. Yeah, exactly. Racing when it's cloudy out or something like that.
And
Like
and,
very
and,
very
and
specific.
their flagship, I think, website that they own is a Red Flag Deals, I believe, right? I think is it Red Flag?
Gosh,
Yeah,
I'm not sure. I don't
yeah,
know, but I do know that it is a very in contrast to Reddit, which has a crazy valuation. Vertical Scope is cash flow generative, and even though it's had a great return, it's still not an expensive stock. So I think there's an interesting situation there for sure. It's another one though. I fear it's going to get taken from us at some point, just because
probably.
it's
The
too
way things go in
attractive.
Canada in the tech space, right? They're all
Yeah,
taken out.
yeah, yeah.
2025. Let's talk about your thoughts on the Canadian stock market specifically, and we're looking at a potential change in administration for the government.
Yeah, we're going to have
How
an
does it all
election at
shape
some
up, do you
point,
think,
right?
2025? Yeah, I hope
Well,
so. Yeah,
so for the Canadian, I mean, tell tell me what the U.S. is going to do, and then I'll tell you what the Canadian market is going to do. That type of that tends to be the way it works. But I think
got it.
the Bank of Canada interest rate theme is going to continue to play a role in our market. It's going to impact the banks. I think I'm of the mind that the Bank of Canada is cutting interest rates because of the Canadian banks, just because there's a wall of mortgage renewals coming, and they're sort of here to help on that front for the banks. So I think that's the story that I can think of. But and aside from the banks, I think that's going to really benefit dividend-paying stocks. Like they've had a bit of a move, Canadian dividend payers, but not much. And there's still some really attractive yield, 6-7% yields out there that are going to look more attractive as that Bank of Canada rate comes down. So Smart Centers is one that comes to mind. It's still paying at 7.3%, but there's a bunch of REITs. So I think there's, as I mentioned, there's opportunity in a lot of dividend-paying companies, and I think our dividend service actually would dictate the same, because it has not performed to the same level as some of our other services. Just it seems like dividend stocks have been sort of shunned, and that'll change. That'll change for sure.
Speaking of dividend stocks, what's going on with Bell Canada? I think their yield is still above 10%.
Yeah, we were talking before about our YouTube channel. So we did a BCE 5-minute spiel on BCE a couple weeks ago, and it's by far our most viewed segment. So it's on the Motley Fool Canada channel if anybody wants to check it out. But where I washed out is the point was made by somebody I associate with, like Teachers Pension Plan tried to buy BCE back in 2007, I believe, for about
Yes, that was when private equity and the big pension plans wanted to take everything.
Exactly.
Right? Basically.
So I think the price was $42 a share, if I recall, something like that. So I think BCE is, the share price is lower. But I sort of went back and looked at BCE's results from 2007 and compared them to today. And I mean, the company's done nothing. I think top line growth has been sort of 2%-ish a year, but their debt has just exploded. Their balance sheet is a mess. So they've borrowed huge, and the company's no better off for it. They just have more debt. It's not more profitable. It's not any bigger in terms of revenue. It's just loaded with debt, and a lot of that I think has to do with the dividend. They've spent hugely on capital expenditures. You're in Toronto, Robin. I'm up in Collingwood. I see BCE laying fiber out in rural Ontario. Like when a house is like every house is half a kilometer apart. Like how is that economical? So I think there's been terrible capital allocation done by that company's management, and then of course the market hated their deal to go into the U.S. Fiber business when they were supposedly going to clean up their balance sheet with the MLSE sale. They went and spent that money elsewhere. So yeah, I think their capital allocation has been questionable at best, if not outright terrible. And as it stands, I don't see how that dividend is sustainable, which is kind of what the market is saying, given that.
That's exactly what's going on. I think the market is saying there's a cut coming, and so investors are on the sideline until there is.
Yeah. Yeah.
Interesting.
And yeah, it's nothing about it when I took a look was appealing.
when you first started, you mentioned that there was no Gen AI. You relied on people, actual humans, to write articles, and yourself included, 5 articles a day. Um, how is Gen AI helping you today?
We're experimenting. I think that's the best way to do it. I think we're trying to figure out how to best incorporate it into our business. I mean, it could be a huge tool for us for sure, and is. I mean, frankly, we've got an internal Gen AI system called Jester AI, and
Fitting.
yeah, exactly. So I use it a couple times a day, just even for quick facts. I just find it's easier just to go in and tell me about Shopify CEO or something like that, or whatever. Just quick little tidbit information. I really experimented with it in a monthly. We do sort of 4 weekly sends in the services. So one of the segments is stocks on our radar, where we just talk about sort of companies from the meeting that I described that maybe didn't make it to recommendation status, but we want to sort of prep members that someday maybe this company you'll meet it, or at least introduce the company so it's not coming in cold. So for one of those segments, I used our internal AI. I made it very clear to people that I was doing this in the send. Like I wrote one of the pieces, and then I did 4 pieces with the Gen AI and said, can you pick the one that I wrote? And it was pretty clear which one the human wrote as opposed to the Gen AI. So I don't think the technology is quite there to completely replace humans, but it's definitely increasing. It's a tool, and it's going to be something we lean on more and more. I think in the years ahead.
And in 5 years, it could be a writer.
It could, yeah. I
right?
think there's
it could
some.
be that sophisticated.
I think our legal department is hesitant to certainly go in that direction. So we're not fully there, but we'll see how those hurdles are cleared in the years ahead.
What's the best part of your job, Iain?
I'm the way I think of it, if I was not employed, or if I was retired, whatever, I'd still be doing the same thing. I just love it. I love the daily news flow. I love how it's a continually evolving situation. I love the trying to balance the risk reward situations that sort of cross our desk every day, every hour of every day. And then it's pretty fun when you sort of land on some winners and watch them perform over the years. I'm sort of a student of the game, and I mean, driving down the highway, I love. Oh, there's a Stella Jones facility or whatever. Like, it's just fun learning about companies, fun constantly learning about companies and how they change, and all the different dynamics that go into it. So yeah, I love investing, and even better that I'm able to garner a salary from doing so.
And so Motley Fool has basically always been the newsletter. You receive the update, you open up your email, you read through it. How's that going to change, you think, the next 5 to 10 years? What are your plans? Are you branching out into other things?
I mean, yeah, I hope it doesn't change. I think we've got a good offering, and I know that we've got a good team behind our Canadian offering, and I hope it looks very similar to what it is today in 5 years' time. I would obviously love our membership to continue to grow, and I'd love to influence investors and get them onto the long-term philosophy that we espouse. But I think you can overcomplicate this situation, and I certainly prefer to just keep it as simple as possible. And here's recommendations for people. Here's why we like them, and follow along. We're gonna keep you informed, and be here to be a shoulder to lean on type thing.
And when people do go to your YouTube channel, what would they find? What type of content will they find there?
Yeah, we're just sort of we're late to the game on YouTube, I must say. We're just building a following, or putting some resources behind building a following. So the team has done we've initiated a weekly, sometimes more than weekly, segment. We call it the 5-minute major, and similar to what I said about BC, so BC is a company in the news. We hit BC for 5 minutes and just sort of lay a few thoughts out there, and again, keep it simple, keep it straightforward, keep it short, keep it snappy, hopefully somewhat entertaining. And we just finished a series on bank earnings, so we went through each of the big 5 banks and discussed their most recent earnings releases. again, trying to keep them simple. I don't know that there's more complex companies in Canada, so it's kind of hard to keep them simple. But we just hit a couple metrics for each and sort of laid out our thoughts there. Of note, of the five, frankly, I thought BMO was actually the most interesting of the bunch. TD's obviously got its issues. I don't know that it's one to be wading into, but I think Bank of Montreal had a good combination of like potential for improved profitability and pretty reasonable valuation. So I thought it was the most best of the big five, or most interesting of the big five anyway. So that's our primary content on YouTube. This is going to be on our YouTube channel, so that'll be fun.
Yeah.
But yeah, we're trying to build that following.
So you mentioned Morgan Housel, who has a big following now. He's all over X. He's written books, but he was a contributor to Motley Fool in the U.S. How does someone watching this become a contributor to Motley Fool Canada? How do they go about it?
Well, they could email me, ibutler@fool.ca. The lead on Fool Canada, her name is Tracy Dahl. Yeah, I'd be happy to receive interest, and I could forward that along. So yeah, ibutler@fool.ca.
That's cool. What do do-it-yourself investors get wrong, do you think, Ian? Like, what are the major pitfalls that you see?
Time horizon. That is the number one, and I mean, and sort of it goes hand in hand with that, but just overreacting to every to the stock price, essentially. They let the stock price dictate the narrative when it should be the company that dictates the narrative on the company. So stock price noise is a huge influencer, and we do our best to try and steer people away from that. And unfortunately it's not easy to do. So they see a stock down 20%, and it's like, oh Lord, what is happening? And seldom is it anything nearly as dramatic as what the market would indicate. So yeah. And I think one of the taglines or flagship lines that our CEO Tom Gardner says is to improve as an investor, just extend your time horizon. It's as simple as that.
Yeah, I struggle with that too. Right, it's so hard pulling the trigger, and especially reinvesting money. Right, adding to a holding when you see it's down 20 to 50%. The drawdowns are so tough.
Yeah.
It's like a different set of instincts come in. Right, a different set of behaviors. You have to have discipline, absolutely, and experience to know.
There's an example today. We're recording this on Friday, December 13th, and one of our recommendations, a multi-recommendation, Enghouse, ENGH is a ticker there. I think it's, when I last looked, it's down 10% after their quarterly results. And I read through the release, and it's like, why would anybody sell this company based on this release? Like, it's nonsensical to me. But people will see that stock price reaction, and I'm sure we've got comments in our forums. It's like, what is going on with Enghouse? Why? Like, nothing. Nothing's going on with Enghouse. They've got a pile of cash. The company is sound, super sound financially, and it's just going to be a story that we watch play out again over the next 3 to 5 years, and how they deploy that capital is going to dictate our outcome.
Yeah, it's a serial acquirer in the tech space, much like Constellation Software.
Yeah,
right?
kind of a baby Constellation Software. Yeah. That's right. Yeah. Really baby.
Is there a pick that you wish you would have made, but it's the pick that got away? And
plenty, but
yeah.
I think my biggest regrets are selling based on valuation, and companies just have gone on to run significantly higher, and that's hurt more than anything. The examples there are sold Tesla, sold Nvidia, and they have just done tremendously well. So that's what stands out on that front. There's plenty of examples. I don't know that one jumps off the page right now in terms of.
We can talk about the opposite then. Shopify has been one of the longest standing positions since day one, right? Since the IPO. What are the other longest running positions?
Yeah, I mean, so our very first recommendation ever was a company called Shawcor, and it did not work out very well, frankly. It's now known as Matter, so the company has changed its name. It's completely changed its business. Yeah. But I mean, some of the early ones going back. What do we got? We got the CCL Industries has been in there a long time. Alimentation Couche-Tard has been in there a long time. CN Rail was an early pick. Fairfax. What else we got? Some of the Brookfield names have been in there a long time. Brookfield Infrastructure.
These companies have all done incredibly well
Yeah,
over that 10-year period.
we've got a lot of green on, and that's an interesting stat that I like to trot out to members. Once a year, I do a bit of an overview of the scorecard, and it's like returns are somewhat random for the picks that we made over the last 1 to 3 years, and then sort of the 3 to 5 year period, you can see that some outperformance is starting to creep in, but our recommendations that have been in there for over 5 years are just killing the market. So it's really, it just speaks again to the importance of holding those positions for a long time. So,
Time in the market is not timing, right? If you try to time the market,
yeah.
Warren Buffett has admitted he can't even time the freaking market.
Totally.
He can't do it.
No,
we can't do it.
Yeah, and I mean, we're coming into, as you said, we're coming into 2025 forecast season. I mean, good luck, right?
Knows?
Yeah, exactly. Yeah.
Okay, well, this has been a lot of fun, Ian. Thanks for sitting down to talk to us, and have a great one. Talk soon.
Awesome. Thanks for having me, Robin.